floor does exist. And the floor, an important note just in this conversation, I think the floor's main support right now is the central bank buying. Central banks are buying in record quantity, predominantly China, Russia, and Middle Eastern countries are really loading up on gold.
Mark Yaxley, how you doing?
I'm doing well, Andy. Thanks.
Thanks for coming on. So let's talk about your background. That, as I mentioned offline, that is one of the coolest backgrounds I've ever seen. Tell me about that.
Yeah, so what you're looking at, obviously, we're here inside the vault at SWP in the Cayman Islands. That is a few $100 million worth of gold. Those are all 400-ounce gold bars. Each one would be valued at just under 800,000 US dollars today. So yeah, pretty cool backdrop.
Okay, so about all of that, how much does one of those weigh? I'm very naive.
Yeah, so each bar weighs 400 troy ounces. So it's about 30 pounds, but it feels much, much heavier because of the density of the metal. So often in the films, when you see them like robbing a bank or the Italian Job, they just kind of throw them in the backpack and run out of the building. I'll tell you that is not likely.
That is in the movies. That wouldn't happen.
No, I couldn't see it happening here, to be honest.
Excellent. So give me the backstory on this. How did you get started in this, being from Canada and then obviously going to Cayman Islands? And I'm assuming this is an assumption that you had, being from Canada, that's very natural resource and very gold friendly, if you would. So tell me your background and how you ended up in the Cayman Islands with SWP.
Well, to be honest, it was a little bit of a coincidence. I ended up working for a company in Montreal back in 2006 called Kitco Metals, which most of your viewers are probably familiar with. They do a lot of market pricing and analysis and stuff like that. So I ended up working there as a very young man, took a job without really knowing much about gold, and kind of just stuck with me, worked in all different facets of the business over the years, touched on pretty much anything that is precious metals. And I joined SWP, or I should say co-founded SWP back in 2014 here in the Cayman Islands. And we were trying to build like a fully integrated precious metals company that did both storage and the trading side for our clients. And yeah, I've been doing that, pretty much precious metals every day for the last 18 years.
Got it. So who would be your client? So for example, what is a typical person? What do they look like, if you can tell me? And what do they exactly are they interested in? Are they interested in you shipping it to them, or are they interested in you storing it to them?
Yeah, I mean, if every obviously a lot of different use cases. We've got clients from all over the world, but most of them would be North American. Either living in the States would be the majority of our clients, about 70%. Average demographic is probably like 55 years old and male, but we service clients all the way from the age of like 18 and up.
Wow.
Um, we majority of our business is storage based, so we help our clients acquire the physical metal. Everything we do is physical. I should stop and say that we don't do any kind of pooled accounts or derivatives or paper trades. It's all physical metal. And the majority of our clients do buy from us and then store the metal here with us, either in Cayman or one of the other 9 vaults that we offer worldwide, including 4 in the US. And yeah, but we do also drop ship to people's homes, just like any other retailer of precious metals would do. But yeah, I mean, kind of, we cover all areas. We have a minimum of about 5,000 US dollars. So I guess that's maybe a little bit higher than some other companies, but it helps us offer our clients a really good level of service, which has been a USP of ours over the years.
Got it. So if I buy a gold bar, would that bar be like right behind you, or is that set in its own storage unit? Or
Yeah.
yeah, how does that work?
So just over this shoulder, you see some bins on the shelf, some plastic looking bins. So most of
Yeah.
our clients, their metal is going to sit in a unique bin that belongs to them. So that's the segregation aspect of their product. Only these large 400-ounce gold bars we actually keep out on the shelf. Most of the product in here is in this vault around me is all in these segregated bins. So you would have your own allocated bars or coins, the bars or coins that we sold to you. In some cases with serial numbers, other products don't have them, but as much information that we can provide you with, and those would be fully segregated in your own bin. So from a ownership standpoint and like a third party risk standpoint, it's the best way for you as an investor to hold your gold if you're going to go the physical route.
Got it. Okay. So let's talk about third party risk. And you say Cayman Islands. a couple of things come to mind. The first thing that comes to my mind is very banking friendly, very neutral in the world, if you would. All of those are good things and it makes me feel safe. But do you have a hurricane problem? I'm thinking like, if you guys get leveled by a tsunami or a hurricane, and I have no idea. I've been to the Caribbean, but never to Cayman Islands. I mean, I'm just imagining whether there'd be gold bars floating around.
I,
Yeah.
well, to be fair, Andy, it was my first question before I started back in 2014. I asked the same question. My first question on the discovery call that I had with my eventual partners was like, "What about hurricanes?" And I like you didn't know much about hurricanes, so
Yeah.
very fair question. I mean, weather in the Caribbean is probably the largest, single risk. Like criminality, not so much an issue. Government in Cayman especially is extremely stable. This country doesn't have any debt. I mean, it's a very good jurisdiction in many, many ways. The one thing that they can't control is the weather. So how do you protect against that? Basically, you build a fortress. So we built a category 5 hurricane rated building. That's the outer shell. And I mean, if you took that rating and really looked at it, we totally over engineered this building. It's probably, this thing will be standing in 1,000 years, put it that way.
These are
Which is kind of a cool thought. Someone will find this one day and wonder what they did inside this building. But the gold itself, beyond the outer shell, obviously you have the bunker and the vaults on the inside. We raised it above previous flood levels and all those kind of engineering things. And then you have insurance. So it's actually insured against hurricanes as well. And the thing about gold and silver is it's really heavy. So it's not going to just float away.
Yeah.
If anything, if there was a flood or anything, the metal would be sitting exactly where you see it. It's just a recovery job after that.
I never thought of that. So yeah, you're right. Well, actually, I did think about it, but not in the moment. But yes, interesting. So talk to me about the gold price. Probably the biggest question, or not even question. It's maybe the elephant in the room when it comes to uh, not even traders, but people that invest or gold bugs or the people that invest in gold is the spot price versus the digital price or the futures price. Uh, Tell me a little bit about that. What are you seeing in the market? Are they matching up? Because sometimes they do, sometimes they don't. Yeah, tell me about the price and what you're seeing.
Well, and I have to be honest, most of my time when it comes to pricing, we trade on the spot price. So I'm not a student of arbitrage between futures pricing and spot pricing, and I'm aware of the debate and discussion points, but
Sure.
I would not be necessarily the best guy in the world to tell you why there's divergence there. Um, yeah, that's my very honest answer on that subject.
Okay, fair enough then. So, but like, I'm going to buy from you. What price would I buy then at? Because I'm not familiar, I guess, right now, because I look at the futures price. I'm not really familiar with the spot price. Tell me about
Okay.
that.
Yeah, sure, sure, sure. No, I understand. So when a retail investor is purchasing physical metal, the price is going to be constructed in two parts. You're going to have the spot price, which you would find on Kitco, for example.
Right.
Kitco usually shows a spot bid price actually because they traditionally bought a lot of gold from jewelers and so on. That's kind of what they built their business on back in the day. But anyways, you're going to see a spot price, which is going to fluctuate throughout the day. That's the basis for the price of purchasing physical metal, and then you add the premium. The premium is composed of basically everything that happens within the supply chain, for the production of that physical metal and also the delivery. So picture it this way, the premium equals from the moment it lands, that raw ore lands at the Royal Canadian Mint, and they start refining it towards that 1 ounce gold maple leaf coin or the US Eagle in the United States. From the moment that it starts getting refined till the moment that it's delivered in this vault in the Cayman Islands, all of those activities are going to be paid for with that premium, which the ultimate consumer or retail investor is going to end up paying above the spot price. So when you look at a product online to invest in physical gold, coins, or bars, you're seeing the spot price plus that premium effectively.
Got it. Okay, I understand. So let's project a little bit then. Or like I should say, look back into again going in price. Price was fluctuating. I want to say again, I'm going from memory from in 23 from the 1600 $1,700 an ounce to as high as we broke all time highs. And this is in the futures market, if you would, recently, and then we sold off
Mhm.
considerably. My question to you is, what are you seeing in the spot price? Are you seeing a lot of demand? Because again, if you look at technical traders or different people that I talk to, is they're all over the map. They're saying, yeah, we're going to the moon in 24. They said the same thing in 23. To yeah, we're going to have massive deflation here in the world economy, and so the price is going to drop significantly. I just talked to a trader earlier, and he was like, "Well, we'll more likely be in a range." So,
Yeah.
what are you seeing in the physical market as far as the price is concerned?
I would tend to agree. I've done this for 18 years. I've I've worked through several bull markets, including the 2008 to 2011 bull market, the COVID bull market. I've seen some very bearish years for gold and silver. I would tend to agree with the last person who you said you spoke to. It's going to be range bound. I have a really hard time with analysts who say we're going to the moon. Um, Having worked in this space for 18 years, we've never gone to the moon. Uh, w- you know, when people talk about $5,000 gold or $300 silver, I have a real problem with that. And we'll get back to the initial question, but the problem is when they speak in those terms, for the average investor who doesn't really understand how precious metals investing works, they go, "Great, I'm going to buy silver at $25 an ounce. I'm going to wait for it to go to $300 an ounce, and then I'm going to cash out and I'm going to make a lot of money." The problem is that's not how precious metals behaves. Number one, the likelihood of getting to $300 in you and I's lifetime is I'd say 50-50 at best, and we're both pretty young guys. The problem also is that they miss so many opportunities to take profit off the table by adopting that mentality and that outlook. So let's say silver doubled and went to $50 an ounce like it did back in 2010, 2011, then that would be a great time to sell your silver at 100% return and invest that money in a stock market that's likely very depressed, and then, ride that stock market for 5 to 8 years and then buy gold or silver when it's depressed and so on, and kind of repeat that cycle and build wealth. So that's, I have an issue with people that make outlandish claims to sell newsletters generally. So I think that a range is much more likely. I think the range for gold is kind of in right now at anywhere between 1850 to 2100, 2150. We saw the surge, the momentary surge 10 days ago in the price of gold. I think range bound is pretty fair and accurate, and it's much better to set investor expectations that way than to make outlandish claims, quite frankly.
Got it. Well, let's talk about you and how you deal with that trading. Do you have clients that come to you and say that, let's say they bought it and silver at 25, and let's say silver does spike up to 50. Do they say, "Hey, let's sell everything I got," and can you provide that liquidity to them?
Yeah, absolutely. I mean, we provide liquidity. We provide both sides of the trade. So you can ring us up and sell your gold that's here with us at any time during regular business hours, and you'll have your money within 24 to 48 hours. So that's a great feature, and any investor should look for that. Especially that's one of the things when people get into gold funds, they might not realize that the redemption periods usually are 30 days minimum. So ETFs are a different story, but when it comes to more, typical gold funds or silver funds, that the redemption periods can be quite lengthy, and they can't always cash out at the moment that they want to. Um, but yeah, I sorry, give me the first part of the question again, Andy. I was
It's
got off
really about
track.
you guys providing liquidity would be my issue. If they say, let's say I bought silver at the going price right now around $22 an ounce, and let's say it spiked up to 50, I called you on the phone, you'd have no issues finding a buyer, correct?
Oh no, we would be the buyer in that
You
case.
would be
So
my buyer. Okay.
typically, SWP is the buyer. If you held a very, very large position, let's say you held, I don't know, a couple $1 million worth of gold and you wanted to sell it all at once, then we would just offlay some of that material to a distributor or to a wholesaler in the market. So the liquidity is excellent, and that's really important. To your point, like typical behavior really depends on the level of sophistication that you're seeing from your client base. We have clients that would sell silver at $28 an ounce. They'd realize, the 30% return on their investment and be happy to take that off the table and then re-enter the market when they felt there was better value for silver. I would be hopeful that anyone, if silver price went to $50 an ounce, they would be sellers. But one of the common mistakes that you do see with precious metal investors, and this probably goes back to the earlier comment I made about the information that they're digesting, is that they tend to be very, very loyal to precious metals.
Yeah.
And, I've had clients that bought, that bought gold at $600 an ounce, rode it all the way to record highs, rode it down to 1,000, and they're like, "I'm never selling." And that's fine. If it's a generational investment and you're gonna be passing this on to your kids, that's absolutely fine. And yes, you should have a component of gold in your portfolio at all times. I'm not advocating otherwise. But at the same time, like any investment, you should also have an exit strategy in mind.
Got it. So speaking of that, what's I was talking to a person that runs a fund, if you would. This was a few months ago, and his thesis, or this is what he told me. He said, around the 200-day moving average of gold, and this is in the futures markets. He goes, that's when I see the Chinese and the Indians start to come in and buy. So if we get a sell off, and this was again, I'm going from memory. This was about 6 months ago, and he said if it goes down around the 200, it's not going to go much further than the 200-day moving average. That's what his thesis. And lo
Mhm.
and behold, he was correct because we had a sell off, and then somebody started buying. I don't know, it was people from India or people from China. But what I'm trying to say is, what are you seeing internally? Do you see a threshold where people like a firm? You don't want to say floor, but where it looks attractive to buyers for your clients to be buyers.
Yeah, it's interesting. I would so just in very much a floor does exist, and the floor, an important note just in this conversation. I think the floor's main support right now is a central bank buying. Central banks are buying in record quantity. Predominantly, China, Russia, and Middle Eastern countries are really loading up on gold, and that's
And you're
all
seeing
based on
that.
yeah, and well, we don't work in that space. These are numbers that are
Sure.
published by the World Gold Council, so
Right.
it's public information. And I recommend anyone who's interested should follow the World Gold Council and receive their free newsletter. It's actually quite informative.
Right.
So that's really where a lot of the support is. And to answer your question, where the points of interest, a couple months ago, gold sagged to like 1830. And that was a little bit below the floor that, I was speaking to clients about. I'm like, 1900, 1850, the floor is in. When it got down to 1830, you're like, that's one of those moments, if you follow this market closely, you're like, you have to strike and add to your position, no matter how much capital you
Right.
have available. And so those are for seasoned precious metal investors, when there's a dip, like again, it gets down towards the 200-day moving average low, you definitely want to be adding to your stack. Unfortunately, what most people do is they wait for new highs or they wait for a clear upward trend, and that's when they invest. And that's actually, kind of the worst time to be doing it. So the average person is not a very good investor, and that doesn't apply just to gold. It applies to equities and all things in life. They tend to wait to make sure that they're not making a mistake instead of actually buying when the rest of the market is selling. But I'd say, yeah, right now, if you ask me that question today, if gold got down again into the 1875, 1850 range, I would be very attracted to reinvest in gold.
Got it. Okay. It reminds me, I've been doing this, and by no means do I have all the answers, but I have about 30 years doing this kind of thing. And my experience has always been you buy pain, and you really buy extreme pain in this market, and then you sell the rip if you're trading it. And that's happened. I just almost every single time that I can think of. So anyways, that's good words of wisdom. Well, thank you so much for your time, Mark. If somebody wants to get in touch with you, find out more about you, how do they do that?
Yeah, you can learn more about SWP at swpcayman.com. I'm also on Twitter. I don't tweet every day. I don't look to build a massive following, but if you want to find me, it's at Yaxley Yax. And you can put that at the bottom of the video. But SWP's website is pretty comprehensive if you're looking to invest in gold. And obviously, we're here to help anybody who's interested in the space.
Yeah, that's where I found you, and you responded right away to email. So I appreciate that. So, Mark, thank you so much. Have a great day, and I'll have you back on sometime in the first quarter, and we'll discuss the markets and where they're at.
Yeah, looking forward to it, Andy. I think we're headed towards a good start to 2024. I've been telling people that things are setting up very well for gold and silver. And I think that closing remark is that record high that we touched on so briefly was just a sign of things that could be next year for the metals.
Yeah, I would agree with you. So, all right. Well, thank you so much, Mark. We'll see you again soon.
Thanks, Andy.